So hello friends, in last video I told you what is the biggest risk in MTF strategy, and in today's video I'm going to tell you the simplest investment strategy in MTF which you can start with. So let's learn about this simplest strategy, including the adjustment, including profit booking, everything I'm going to tell you in this video. So let's begin. So hello friend, my name is Arun Tiwari and I am making this video on MTF, margin trade funding or margin trade facility, whatever you can call it. Okay, and if you are the person who is directly landing on this video and you have not watched the earlier video on this series, I will request you to watch that series. The link is given here so that you understand the whole concept about MTF. So in this video, basically I'm going to talk about the easiest investment strategy, because yeah, there is all knowledge is fine, but where to start, that's the most important part. How I'm going to make money, tell me that. So that's why I'm making this video, that how you can start. Even you are a first time investor, you can simply start using this simplest investment MTF long term strategy. So let's begin. So here I have created a small non fancy you can say presentation. I basically don't like PPT, although I can make it, but it is more of time pass than giving some information. The simplest thing as a CA, I just like this spreadsheet. So I made a simple investment here. So the simplest way you can start with using Nifty Bees or Nifty ETF, exchange traded fund. Most of you might be aware about Nifty Bees or Nifty MTF. So it's basically a kind of mutual fund which trades like a stock on the exchange. So like a stock, you can anytime buy, you can anytime sell. Now, let me explain you why I'm calling it simplest, why it is safest, why it is cheapest, and then I will tell you why, how to start about it, how to book profit, and how to do adjustments. So let's begin with the very first part. Why I call it the very simplest? Because it doesn't require any analysis. Everybody knows about Nifty 50, best 50 stocks of Indian equity market. So you can simply buy it. You can buy it from anywhere. You will get the same stuff. And good thing is this, you don't have to do analysis like any other portfolio and all. Here, no analysis required. Second important part, there is no company risk, there is no sector risk, because there is 50 companies. So suppose 2-3 companies doesn't perform, yeah, it will definitely not give you that much return if all the companies are going to perform, but at the same time, it is not going to dampen the return. So if you suppose investing in some one stock or two stock, chances that stock will not perform and you will not get the return. On top of that, you have to pay interest. But here, out of 50 stocks which are the leader in their market segment, you can expect at least 30-40 is going to perform. 10 may not perform, but still you will get average return, which is 14.6% for Nifty for past, I think, 20 years. So even you expect say 12%, I'm not asking what 14.6%, even you receive 12%, still yearly you can make 18% return using MTF. So suppose if you invest only in cash, your return will be only 12%. But if you invest using MTF, your return will be 18%. And I will tell you further that you save a lot of cost, lot of charges. If you add that, this 18% return will easily go and become 20% return every year. What else you can expect from this kind of simple strategy? We don't have to learn any chart or any parameter or any like some magic tricks or magic chart or something. I don't understand all this nonsense. So it is a very simple, straightforward thing. Now, why I'm telling there is no sector risk, because in Nifty, almost all the companies from different sector are there. So maybe some sector will not perform 1 year, but still you will make something. So you don't have to bother that what happen if the IT company doesn't perform, what happen if the cement company doesn't perform. You don't have to bother, because almost all the companies are from different you can say sector, different you can say business areas. So this also somewhere make it very safe, at the same time simple also. Now the best part which I love about Nifty ETF, the broker gives me the best possible margin, and more margin I get it, generally more I will make money on my own capital. So here you can easily expect 75% to 80%. This will not be case with any other stocks, because most of stock, if they are risky stocks, they will not give you more than 35-45%. But here you can get 75% to 80%. Even I take 75%. Suppose you want to create a 10 lakh rupees portfolio, you just need to bring 2.5 lakh rupees. You can easily get a loan or margin of 7.5 lakh rupees, and your 10 lakh rupees portfolio is ready. So this is the best part, and that we require when we go for MTF. We require stocks, we require portfolio where we can get maximum possible margin, because more the margin, more the return. Now let's talk about the second important part here, why it is safest. As I told you, because it is only containing the blue chip companies, the leader of the Indian equity markets. So what else you can expect? At least you can expect that these market leaders will not be so volatile as generally the petty stocks or small stocks are there. So this will be definitely much more stable, and on in long term they are going to these companies are going to generate better returns. Now if you invest something in long term, it is generally more safer than a trading, because you are looking for 5 years 3 year, and then what happened in 3 year 5 year business grows automatically. So what happened in short term, generally when you make money when there is a rumor, but in long term you make money when business makes money. Now if you talk about that, there are best companies in the market and we are giving them 3 years 5 years timeline. What can be reason that they are not going to give us a good return? And I'm just expecting 12%. Anything over and above is a bonus for me. I'm very happy, right? So the thing is, when I'm talking about long term, in short term, it is possible that even good companies can collapse. They have the business which can collapse. But in long term, generally what happens, these companies are going to again create something new. They're going to capture some new areas, and these will be more safer than any new buy company, because these big companies have more money, more talent, more, you can say, customer, and the bigger market to cover. So long term is always work better for big companies. Now let's talk about the next important thing, why I call it the cheapest. Also cheapest in the sense, the cheapest way to invest in stock market. So when you invest in stock market, you don't only pay brokerage, you pay STT, you pay GST, you pay exchange fees, you pay CV fees, so many other charges, like pledging, non-pledging, so many things. So more you are going to buy and sell, more expenses going to incur. Now understand, Zerodha just charge 20 rupees, and with just 20 rupees per trade, and they don't charge on long term, they only charge for F&O and trading, they make 6,500 crores every year. Can you believe this? Such a big amount from such a small amount. Where it comes from? It comes from our pocket, investors' pocket. And this is only their part. Apart from that, we pay GST, STT, which is very big now. It is almost doubled. So why is I ask this cheapest? Because once we hold, you don't have to daily buy and sell. Most of the time, we are going to hold it. So it is lowest cost of holding. Another reason why it is lowest cost of holding, generally these ETF are passively managed fund. That means the fund manager doesn't do anything. He just sit in the car and car works on autopilot mode. So because it is autopilot, they charge less management fees. So if generally in a mutual fund charges 1% or 2% as a expense for managing our fund. Here it is hardly 0.06%. Lowest, like mutual fund with the lowest management fees is this ETF. Now, another thing I just want to explain you quickly, like lowest cost of investing, because I don't have to do research. I don't have to find some app which gives me a different kind of charts, candles, and all this. Lots of people spend a lot of time and money on that. You don't have to do anything here. Second thing, the cost of funding. Now, again, understand, because my margin is more, and it's possible some broker can give me less return, less interest rate if I go with ETF. Another point, understand, because I'm not buying and selling every day. I'm not doing a lot of you can say leverage, because in intraday people take 10 times, 20 times, 30 times leverage. More leverage you take, more interest broker is going to charge. Here we are taking only a leverage of 3 times max. So 3 times, like 2.5 lakh I'm putting, 7.5 lakh I'm taking, so it's a 3 times leverage. I have to pay less charges as interest. Now, everything is fine. Maybe people are very convinced. Sorry, it's very easy. Let's start it. How to start it? So the easiest way, you have to start like at least 2.5 lakh rupees you should have, either if you want to invest, or you can bring 50,000 rupees every month as a SIP. Both way you can do. Even you have 2.5 lakh rupees, still I will ask you not to invest at one go. As I told you in last video, invest 50,000 every month. Take 1.5 lakh rupees of leverage. So every month you will start investing 2 lakh rupees, and do it, spread your investment to 5 months so that you can get best average rate. Now always keep a 20% in liquid. I told you in last video also. Why? Because if suppose Nifty goes below 20%, your broker is going to ask you the margin. That time you can't say no, I don't have any margin, I invested every amount. At least keep 20% of that in a liquid fund, pledge it so that your money, your portfolio should not be squared off in mid of crisis, right? Now, how to book profit? If you ask me, never book profit. It's a long-term investment. But there are some time when you have to cut, you have to trim some profit because you have to do it. The market is that way. So my simple funda is that whenever the Nifty hits a new high, for example, 26,800, I think if I'm right, was the peak. Now, if Nifty is going to touch 27,000 or 27,500, I'm going to sell 30% to 50% of my portfolio. And generally, I have seen 9 out of 10 after hitting a new peak, Nifty or most of the portfolio, they just go down for some time. And then I can again buy back those stocks at a lower price in SIP mode, maybe small amount, or if I feel like I can put whole amount whatever I booked earlier. So I never sell it, I just trim and reinvest. So this you can simple use, you don't have to use any algorithm or something. All goes to check out when to buy, when to sell, when to exit, when to enter. Very simple thumb rule. Anytime it's hitting high, book 30% to 40%, sorry 50%, and then reinvest slowly. Now when to average out, like when to reinvest or when to invest more amount than my SIP. Whenever Nifty goes down by 5%, it's a good amount, good time to buy, because I have seen in all the time Nifty generally doesn't stay low a longer period. 3 months, 4 months, 5 months, 6 months max. Some situation when the market is bad due to some reason, it can stay low longer period. It is good for me. I will buy. So whenever Nifty goes by 5%, I will do my SIP double of the amount. So if I'm doing 50,000, I will do 1 lakh rupees that time, that month. Okay. So it goes another 5%, I will do 1.5 lakh rupees, something like that, depending on the funds. But at least double SIP, I have to do it. So basically, what I told you here is this is a simple thing you have to keep in mind when you're starting this MTF. And if you are the first time MTF investor, start with this. Then when you build up the trust and confidence, then you can find out, you can create some good portfolio. I will tell you about my portfolio also in upcoming videos, how I shortlist stock, how I create a portfolio, how I start investing in other portfolio. But that is for graduation ceremony. This is the basic, and I will love that if people start something very basic and then slowly graduate, because investment also is a learning for lifetime. So that's all friends here. If you got any questions, queries on this, please put me in the comment section. I will reply. I will love to reply. And I will say you, if you are a long-term investor and want to create money for lifetime, not just to play some games, then this is the thing. This is better than investment, pure investment, and it is much better than any other form of trading, speculation, FNO, whatever you call it, right? So just learn it for sake of your good future. That's all in this video. Thank you. Have a nice day.